Hello and welcome to Property Insights. I'm Stephen Galpin, and today we're going to be talking about the world of property finance, and nobody better to help me with that is Lucy Waters of Aria Finance. Welcome to you, Lucy.
Hi.
Well, tell us all about it. What's been going on this month?
So we had the Bank of England meeting earlier on in the month, which to some was quite disappointing. I think a lot were expecting a rate cut on the cards. We were sort of in the balance as to whether that was going to happen. And I think the vote being at 5-4 really demonstrates that they were very divided. Obviously, there's the wider economic outlook, but within that, we've still got sticky inflation, or stickier than they would like. So I think until that gets under control, I think we'll continue to see that division when the committee meets. But
it's a bit of a problem, really, isn't it, for the Bank of England, because you've got people saying, well, you know, inflation's going up, so don't cut the rate. But then the next minute they're saying there's no growth and people can't afford the cost of living.
Absolutely, yeah.
And I suppose we're as guilty as any, because we tend to look at it from the property point of view.
Yeah.
But it is a much wider spectrum of that has to be taken into account.
Well, that's right. I think, you know, selfishly, we look at it from our own lens, but we need the property market to move. We need liquidity in the property market. It's such a vital part of the wider macro. And I think despite that, the more positive picture is that interest rates, or the average interest rates, the average 2-year and 5-year fixed rates were below 5% at the start of November, which is the first time they've been there for some time.
Right.
So actually what that shows us is that despite the Bank of England's decision to hold interest rates, we are seeing some lender competition and also a reduction in swap rates, which means that lenders are able to pass on a lower cost of borrowing to those looking to buy and remortgage.
Lucy, I'm going to take you up there. You better explain to our viewers what swap rates are.
Yes, so a swap rate is effectively the rate at which your fixed rates are based on. So there's a misconception in the market that the Bank of England base rate is the thing that drives your mortgage rate, and to an extent it is, but the swap rates are looking at the picture of where interest rates are likely to go over a horizon of the 2-year, the 5-year, and it's the rate at which lenders are lending to each other and borrowing costs are based on, and therefore it drives the interest rate that's actually put out to the customer.
Okay, I think I've got it.
In short.
Thank you. Lucy, I was looking at your notes pre-filming of this programme, and you're talking about London prices taking a drop, and you're suggesting somewhere around about 4% for the year. We do talk to a lot of agents in here, and currently on a lot of the quite expensive properties, we're seeing anything up to a 30% drop. What's that doing for lender confidence?
Yeah, I think that 4% to me sounded a little bit more positive than the real feel of what we're seeing as well. So I'm probably talking more about prime London here than anything else. And I think prime London has really suffered. And actually there's just not much liquidity in that market at all, which means that where properties have transacted, given the scale of those transactions, it can have quite a big, it skews the market, because effectively if someone has to transact and it's a large value transaction, whereas actually what we're seeing is a lot of it just isn't trading. And I think that end of the market with tax changes, proposed tax changes, it's been suffering for some time anyway. Higher interest rates and proposed tax changes has been a real blow, but rental prices actually are growing in that sector. So I think the yields have gone up, but capital values have come down.
I think I'm old enough to realise now, Lucy, that it'll all come back anyway at some point in time.
It's a cycle.
It's very circular, isn't it, really? Just very quickly, we do see now that with government legislation, there's going to be an encouragement to go from leasehold to common hold. Again, is that going to cause any security problems in the property industry? Are the lenders going to like common hold?
I suppose the devil's in the detail with these things, but anything where there's uncertainty and where there could potentially be an impact to security, value or saleability, that's what generally spooks lenders. So it will I suppose, depend how it's managed and how they see that through. But generally, lenders like things to be certain, and they like to understand what can have an impact on the value of the asset. So I think it will depend how valuers perceive it.
No panics yet then.
No panics yet.
Great stuff. Lucy Waters of Aria Finance, thank you very much for coming in. Thank you for giving us your 5-minute roundup of the month's financial information. Very kind of you.
Thank you, Stephen.
Pleasure. Thank you for watching. That was Property Insights.